Hi, in this video we will apply all that we've learnt and solve a complete and comprehensive sum wherein we will have to prepare the profit and loss appropriation account as well as the partners capital accounts. As we prepare the profit and loss appropriation account, we will have to apply what we learnt in interest on capital, interest on drawings, partner salary, commission, etc., interest on loan, etc., to solve the complete sum. Let's go to the example. Example: on 1st April 2018, Precious, Noble and Perfect entered into a partnership with capitals of rupees 60,000, rupees 50,000 and rupees 30,000 respectively. Perfect advanced rupees 10,000 as loan to the partnership on 1st October 2018. The partnership deed contained the following clauses: interest on capital at 6% per annum, interest on drawings at 6% per annum. Each drew rupees 4,000 at the end of each quarter commencing from 30th June 2018. The working partners, Precious and Noble, were to get a salary of rupees 200 and rupees 300 per month respectively. Interest on loan was given to Perfect at 6% per annum. Noble was to get a rent of rupees 2,000 every month for the use of his building by the firm. It was paid to him by check at the end of every month. Profits and losses are to be shared in the ratio of 4:2:1 up to rupees 70,000 and above rupees 70,000 equally. Profits of the firm for the year ended 31st March 2019 before the above adjustments was rupees 1,35,000. We are asked to prepare the profit and loss appropriation account and the partners capital accounts and the current accounts, assuming that the fixed capital method is being used. Now, the profits for the year is given as 1,35,000 before the adjustments. However, on going through the sum, we find that there are two charges. The fourth one, which is the interest on loan, and the fifth point where Noble is to get a rent for use of his building by the firm. So when we bring down the profits, we need to deduct these two and then bring down the profits while preparing the profit and loss appropriation account. So let's begin by preparing the profit and loss appropriation account. Profit and loss appropriation account. For the year ended 31st March 2019. Left side of the ledger account is the debit side and the right side of the ledger account is a credit side. In each side, particulars, inner column and outer column. Again on the credit side, particulars, inner column and outer column. Let's bring down the profits by profit and loss account. We need to deduct the charges and then bring down the profit. The two charges are, we'll prepare our working notes in the side. Calculation of interest on loan. The amount of loan which Perfect has advanced is given here rupees 10,000, into the rate of interest on loan as per the fourth point, 6% per annum. So 6 divided by 100, and we'll have to remember that the loan was advanced by Perfect to the firm only on 1st October 2018. So the interest on loan can be given only for 6 months. So the amount of interest on loan is rupees 300. Next, let's calculate the rent. The fifth point says Noble was to get a rent of 2,000 per month for the use of his building by the firm. It was paid to him by check at the end of every month. So total rent 2,000 per month into 12 months, which is equal to rupees 24,000. So before we bring down the profits of 1,35,000, we'll deduct these two charges, which is 1,35,000 minus 300 minus 24,000, which is equal to 1,10,700. Let's continue with the first point. Interest on capital should be given at 6% per annum. The interest on capital for Precious, Noble and Perfect to interest on capital. Precious, Noble and Perfect. $60,000 for Precious is 60,000 into 6%, which is equal to 3,600. For Noble it is 50,000 into 6%, which is equal to 3,000, and for Perfect it's 30,000 into 6%, which is equal to 1,800. The total interest on capital for all the three of them is equal to 8,400. Next, let's calculate the interest on drawings for each. Amount of interest on drawings. We'll have to use the average period method. Each partner has drawn 4,000 at the end of each quarter commencing from 30th June 2018. So in the year, the first quarter ends on 30th June 2018, the first quarter being April, May, June. So at the end of every quarter, so interest on drawings is equal to amount per withdrawal rupees 4,000 into number of withdrawals, number of quarters in a year is 4, into the rate of interest on drawings to be charged is 6 divided by 100 into 1 by 12 into the average period when the drawing is done at the end of every quarter. It's 9 plus 0 divided by 2, which is 9 by 2 average period. Answer for interest on drawings, rupees 360 each partner. interest on drawings to be credited to the P&L appropriation account. Precious, noble and perfect. 360 rupees each. Which comes up to 1080. Next, partner salary. Third point, working partners Precious and Noble to get a salary of 200 per month and 300 per month respectively. Two partner salary. Account Precious and Noble. For Precious, it's 200 into 12, whereas for Noble, it's 300 into 12. 2,400 and 3,600 respectively. Total salary rupees 6,000. We are done with all the items. We need to balance the profit and loss appropriation account. Before we balance, let's make a note of this point, the sixth point over here. The profits are to be shared in the ratio of 4:2:1 up to 70,000 and above 70,000 equally. I'll write it on here. Up to rupees 70,000 in the ratio of 4:2:1 and above rupees 70,000 should be in 1:1:1. I'll remove the split and we can balance the profit and loss appropriation account. The total of the credit side ₹1,11,780. Two profits transferred to partners. Remember, we are maintaining the fixed capital method. So two partners current account. Precious, Noble and Perfect. Divisible profits. Is equal to 1,11,780 rupees minus the total of the debit side 14,400. $97,380 above 70 up to 70,000 4:2:1. So each gets 40,000, 20,000 and 10,000. And above 70,000 equally, and the amount above 70,000 is 27,380 rupees. We need to give it equally. So divided by 3. So each gets 9, 1, 2 6. Total profits for Precious 49,126, 29,127 for Noble, and for Perfect 19,127. $126, 29,127 and 19,127. Total 97,380 rupees. So we've completed the profit and loss appropriation account. Let's go ahead and prepare the capital and partners current account, assuming that the capital accounts are maintained in the fixed capital method. Let's continue with preparing the partner's capital account under the fixed capital method. I have a ledger account here. Partners capital account. Left side debit side, right side credit side. On either side, date, particulars, names of the partners, Precious, Noble, Perfect. And again, date, particulars, Precious, Noble, Perfect. The capital balances as on 1st April 2018, the very first sentence, 60,000 for Precious, 50,000 for Noble and 30,000 for Perfect. So date 2018, 1st April. Credit balance by balance brought down. 60,000 Precious, 50,000 Noble and 30,000 Perfect. We do not have any entry for additional capital introduced by either of them or any withdrawal of capital. So we'll balance this account. The greater total, 60,000 for Precious, 50,000 for Noble and 30,000 for Perfect. Entry at the end of the year 2019, 31st March. 2. Balance carried down. Difference this will be brought down to the beginning of the next year, 2019, 1st April. By balance brought down, 60,000, 50,000 and 30,000. So we just completed the partner's capital account under the fixed capital method. Let's go ahead and prepare the partner's current account under the fixed capital method. Partner's current accounts. Left side debit side, right side credit side. On each side, date, particulars, precious, noble, perfect. Date, particulars, precious, noble, perfect. The partner's current account begins with the balances of the partner's current account. But there was no such balance which was given in the question. There was no current account balance given for either precious or for noble or for perfect. So we'll continue with the items of interest on capital, etc. We will need the amounts of interest on capital, partner salary, interest on drawings, etc. And for this I have kept the profit and loss appropriation account in the top half of the screen. So all these will be credited or debited at the end of the year. So into 2019 31st March by interest on capital. Account. It's 3,600 for precious, 3,000 for noble, and 1,800 for perfect. We'll continue with on the same date the partner's salary by partner's salary account. For precious it's 2,400 and for noble 3,600. On this side 2019 31st March, 2 drawings account, when we looked into the sum, we found that each partner had withdrawn 4,000 at the end of each quarter commencing from 30th June. So each of them 4 times a year into amount per quarter, which is 4,000. So 16,000 drawings for each partner. Let's continue with the interest on drawings. 360 each partner to interest on drawings account. 360 rupees for each of them. And the final entry by profit and loss appropriation account for the profits. Let's check out the profits which each one of them have got. It's right here. Precious 49,126. Noble 29,127. And perfect 19,127. So let's balance the account. The total for precious $55,126. And the balancing figure on 31st March, 2 balance carried down, 55,126 minus 16,360. Which is 38,766 for precious. The total for noble $35,727. And the difference for noble $19,367. The total for perfect $20,927. And the difference $4,567. The balance will be brought down in the beginning of the next accounting period. By balance brought down 38,766 for precious, 19,367 for noble, and 4,567 for perfect. So we've just completed the partner's current account also. I'll remove the split and we can see all the accounts together. So this was the profit and loss appropriation account which we prepared. I'll scroll down and you can see the partner's capital account and also the partner's current account. A small note: in the case of fluctuating capital method, please take up the items which is debited to the partner's capital and current account in this method and debit it to the partner's capital account, and do the same for the credit items. Credit it to the partner's capital account, and then you will be able to prepare the partner's capital account in the fluctuating capital method.